So student, in last session we discussed section 2 charging section and section 3 taxable income. Then we move on to identify the format of tax computation. So this is the format that you need to follow throughout this program, right? And today onwards we'll add other sections also into this. Few addition, this tax on taxable income is coming under section 2, right? Section 2. This part B also coming under section 2 we discussed. Right. Now we discussed the structure of the act. This is the format. What is the format? I'll give you a very concise understanding. You first take taxes paid by a person who has a taxable income or person who receive final withholding payment, right? We'll take some parts here. Section 2, who, first question, who, person with this one and this one, right? This is section 2. Then next question was, second question was, which year, which period, that was discussed under section 12, right? Section 2, section 12, section 20, right? On what? Third, on what? That's also same thing, taxable income and final withholding payment, right? So person defined under section 195, person defined under 8 types. This also defined under resident versus non-resident. This is governed under section 69, right? Section 69, this is governed. Next, so this is the cream that you need to learn, right? Cream of that you need to learn. What is? First thing you need to learn section 4, next thing, assessable income. There are difference for resident and non-resident person, that's given under section 69, right? So it's very small letters because I need to write everywhere, right? Section 69. Then you need to learn section 5, what is employment, section 6, business income, section 7, assessable income from investment, section 8, assessable income from other sources, total assessable income, qualifying payment, section 52, then taxable income we discussed, tax rate, first schedule, gross tax liability, then tax credit, right? So exemption also discussed, exemption for these things, there are exemption under section 9 and third schedule, right? So those are the main areas. However, apart from those areas, there are other areas to discuss that we discussed. Section 27, 21, method of accounting such as accrual basis, cash basis, accrual, cash basis. Then realization provision, asset realization provisions, asset realization provisions, provisions such as section 39 to 40, 48, 49, likewise, right? Those areas. Almost every provision need to be looked at, but this is the structure, and better structure is there in your content of this act, right? Consolidated tax. Today onwards we will look at each and every section. We will learn each and every section of the act, right? So student, today let's see section 4, division 2, section 4 onwards. Division 2, assessable income. Assessable income. Assessable income. Mainly section 4. Section 4, then individual assessable income are described under section 5 to 8, right? Section 4, total assessable income, then section 5 to 8 we will discuss. So first look at section 4, the assessable income. Now I hope you have taken your Inland Revenue Act and you can write notes there, and you need to keep separate CR book and write whatever I am explaining for each section, right? You take section heading, section number, section title, and you write my explanation, my example, everything, right? That's how we learned. The assessable income of a person. Now no need of a notes, because everything there in that, and being C-suite level expert, you need to always refer the source document without remembering class notes. The assessable income of a person for a year of assessment from employment, business, investment or other sources shall be equal to, in the case of resident person, the person's income from employment, business, investment or other sources for that year, wherever the source arises. See, what is the difference? Here talk about the assessable income of a person for a year of assessment from these types: employment, business, investment and other sources. Now 4 times we learned it. Shall be equal to, in the case of resident person, in the case of resident person, for what? Income from employment, business, investment or other sources for that year, wherever the source arises. So remember that. Assessable income of a resident person. Still, if you don't understand resident person, I'll explain. Right? Firstly, just understand the word meaning. Resident person, if the assessable income is considered for a resident person, that's include to the income wherever the source arises. Maybe in Sri Lanka, maybe in another country, maybe in another planet. Maybe let's say Elon Musk send people to let's say moon, right? Then his income may be earned in the moon, not in earth. right? So it doesn't matter where it's being arrived, he has to pay. Let's say he is a Sri Lankan person, he has to pay tax on their any income in wherever it's arrived, right? Entire universe, not only other countries only, not only Sri Lanka, other countries including an entire universe, right? Maybe at space, wherever the source, wherever the location, wherever the source arises. For resident person, who is resident person? In simple terms, student, resident persons mean person who lives in Sri Lanka, right? We will discuss residency in separate topics under section 79. Residence person, it's defined under section 69. You can write this, right, in your books. Right? Employment, business, investment or other sources for that year, wherever the source is. And in the case of non-resident person, non-resident, who do not reside in Sri Lanka, who do not live in Sri Lanka, foreigner, simple understanding, Sri Lankan person, Sri Lankan person, foreigner. This is simple, don't write this, foreigner, right? That just for simple understanding. Proper wording you need to remember, resident and non-resident person. The person's income from employment, business, investment or other sources for that year, to the extent that the income arising or is derived from source in Sri Lanka. That's very important. That wordings are very important, right? To the extent that the income arises in or is derived from a source in Sri Lanka. Income should be arises in or is derived from a source in Sri Lanka. See the wordings, the different interpretations are there, but for the moment understand, if you are a foreigner, non-resident person, it is taxable. This assessable income includes income from sources only in Sri Lanka, income earned from Sri Lanka only, not any other place income. This location of the income. This section discusses about the location of each person's income that would be liable for tax. So in simple terms, student, I'll say this. Now you are computing these type of persons. Now you are computing assessable income from each person. No. So this assessable income for a resident person from each of these source would be income in world, anywhere in the world, right? He might be earning income from anywhere in the world. But for non-resident person, he might be earning income only in Sri Lanka. That is only coming under this income source, this computation. So what income we included under these headings? If it is a resident person, employment wherever in the world, business wherever he do the business, maybe in UK, maybe in India, maybe in UAE, right? Investment wherever he made the investment, right? Maybe in another country or maybe in Sri Lanka, and other sources wherever in the world. So all those should be included for resident person, right? Non-resident person. For non-resident person, if you are computing income for a non-resident person, you include only these employment income in Sri Lanka only. If he is employed in Sri Lanka, that income only you take. If he is doing a business in Sri Lanka, only that income you are taking. If he is doing any investment in Sri Lanka, only that income you are taking. Right? If he is having any other income in Sri Lanka, that only you are taking. Foreigner, let's say UK citizen, he might have different business in all around the world. Let's say Elon Musk, right? Elon Musk will have different income all around the world, but those income would not be taxed in Sri Lanka. But if he comes to Sri Lanka and let's say invest in Starlink connections, then that income only will be taxed in Sri Lanka, right? So you need to understand that properly. I'll explain in this way also. Assessable income, right? Resident you need to take world income. So world income, right? Resident person, wherever the source arise. What is the term? Wherever the source, right? Wherever the source arises, wherever the source arises. Wherever the source arises. Non-resident person, what is the word? Income arises in O, right? Remember the word correctly. Income arises in O is derived from a source in Sri Lanka, right? Is derived from a source in Sri Lanka. Income arises in O is derived from a source in Sri Lanka. Income arises in O derived from source in Sri Lanka. So we call it I cannot draw it nicely. Right, Sri Lanka. You write it, draw it correctly, right? Sri Lanka. Sri Lanka. So non-resident person, you are taking business, employment, business, investment or other sources from source arises in or derived from a source in Sri Lanka. Income arises in or derived from a source in Sri Lanka. For resident, world income, right? So what is this source? Now what are the question? Every time you need to ask question, right? If you have any question, you can drop a message and ask it. But you are at C-suite level. If you looked at your syllabus, you have seen it's very comprehensive. It's not just knowing the law. You need to understand it properly with the interpretative skills, right? So ask every question. So student, next question you might be having is what is the source in Sri Lanka? Source in Sri Lanka. That is mainly referred at section 73, but you need to look at other section 72 onwards. Section 72, section 73, right? And what is not source in Sri Lanka also mentioned. If it does not become source in Sri Lanka, then it's a foreign source, right? So these section also there. So we will learn this when we are discussing about non-resident persons taxation. That's a separate comprehensive study, right? You need to study it comprehensively, right? So this is the section 4. This is the main intention of section 4, to segregate between income for resident and non-resident persons. Now let's go to section 5, right? Section 5 we will go. We'll understand section 69. It's defined who is resident and who is not a resident, right? Who is resident and who is not a resident is defined under section 69. It's a separate discussion that we need to follow, but without following that at this moment, we will directly go to other calculations, right? Other sections. So student, we will go in the order of the act, right? That will be very easy for you to understand everything, right? There are different order that everyone can go. Other lectures, other consultant will be going in different orders, but I prefer you are going in the order of the act. That's a logical order in the act, right? So we will go in the order of the act itself. Now we learned section 1, section 2, section 3, section 4. Now we are at section 5. What is the section 5? Assessable income from employment, right? Assessable income from employment. Here we have the employment, and this is the section heading. We'll take another color. Employment, right? Employment income. So employment, who engage in employment? So individuals like you and I, right? Persons, which kind of person? Individuals, normally individuals, right? Employment, general meaning means, employment means job, right? Maybe we are working in some company, some partnership, some firms. Likewise, we might be working in somewhere. So we are being employed by them. Employer-employee relation, employment, right? And individuals' income from an employment. Individuals' income, remember that. This is for individuals. Employment is there only for individuals, not for companies, not for partnership, right? Employment income is applicable for individuals. An individual, who is individual? Individual person, natural persons like you and I, right? An individual's income from employment for a year of assessment shall be the individual's gains and profit, maybe capital gain, maybe revenue nature, whatever, salaries, remuneration, whatever, gains and profit from the employment for that year of assessment, right? So we are computing for a year of assessment. You know what is year of assessment now. So individuals assessable income from employment means gains and profit from employment for that year, right? In calculating so next question, before going to that area, we will see what is the question that you might be having in your mind, right? So now I don't have forum to get your feedback. No, if you can provide feedback through WhatsApp or any media, that's better. But I'll imagine that you have a concern now, right? So what is employment, right? That's a concern you have. So that's defined under section 195. You better note it, right? In your books also. This is your textbook, right? This is the book. This is your note. This is your class book note, right? Section 195. Employment. Before going into anything else, we will first understand what is employment and what is not, right? So that's a very crucial understanding we need to obtain. Let's go to section 195 and see what is employment and what is not employment. So student, this is the definition under section 195. You might remember in our first discussion, we looked at section 195. It's provide unless context otherwise provides. Unless context otherwise provide. Employment means a position of an individual in the employment of another person, right? So what is the meaning of employment? You are employing someone, you are employing some place, you are employing something, right? So it's kind of occupying. You are taking control. You are taking control of some person. So position of an individual in the employment of another person, right? So another person employed me. My time is employed by another person, right? So in the word employment definition itself, another term employment is there. So you need to understand this in general meaning. General meaning, right? Position, that is a position of employment, right? Individual position as employment in general context, right? A position of an individual as a manager of an entity, manager, right? Manager of an entity. Entity we learned what includes in an entity. Company, partnership or trust, right? So a position of an individual as a manager, employment. We are discussing the term employment, right? There are different terms. There is another separate term employee, another separate term employer. Now we are discussing only for employment, right? So employment means that connection, position, right? Connection between employer and employee. So employment means a position of individual in the employment of another person, connection, right? Next one, a position of an individual as a manager of an entity. So this manager word also defined under section 195. So same section, right? Same section, it's again defined, right? So you need to go here and there in that, right? So that's a skill. You know where to look at, right? That's the skill you need to develop at CSUT level rather than looking at your class notes. That's why I'm taking these notes, right? Next one, we'll look at this definition later. Let's go into these items. Third item, a position of an individual entitling the individual to a fixed or ascertainable remuneration in respect of service performed. That's very important, right? That's a very important point, right? Keep in mind at your level it's very important, right? So we have seen in practice student, now there is a trend. People are engaged, even finance professionals, many finance professionals are engaged in freelancing. They say it to be a freelancing, but only problem, even though they are terming it as freelancing or some kind of a foreign job, right? They are working from home for foreign companies, right? Now we have seen in previous period, we have seen that that people are trying to term their agreements as service agreements. However, student, in that agreements they have fixed remuneration packages, right? Then it doesn't matter what is stated in that most of the time, right? That court determine, even agreement also need to look at other terms also, but even agreement provide it as a Service. If you are in fixed remuneration, the courts sometimes take the position that it is employment, right? So those are tax planning. These definitions are very important for individual tax plannings, right? Service fee income was exempted previously. Now also it is only taxable at lower rates sometimes, right? Based on other criteria has to be satisfied. Therefore, people in tax angle like to say they are in service contract rather than in employment contract. So if they have those contract, that contract should not satisfy these characteristics, right? If there is any kind of these characteristics, there is a possibility that that service contract being classified as an employment contract. See, this is very important character of term employment, right? Fixed remuneration. You are getting fixed remuneration. Each month you are getting 500,000. Each month you are getting 1 million. Or else each month you are getting 10% on sales revenue. That's also fixed. Percentage is fixed, even though amount variable. Right? So if there is a fixed remuneration basis, that's kind of a employment, right? That's a one character, right? So that's very important. A position. Now you are in a position of an individual entitling the individual to fixed ascertainable remuneration in respect of his service provided. Let's say I am a tax consultant. I have been recruited by another foreign tax firm, right? So I am providing my service, tax service to that firm. However, they are paying me monthly fixed fee, right? So in service contract also there are retainer fixed fees. Therefore, it's very analytical area in the law, right? Argumental area. So you need to consider all the facts, not only this, and determine whether it is a service contract or a employment contract. There was a circular issued by who haven't signed any contract from that that competing company, the amount that you received is because they invite you to be an employee of them in future date. So that's also employment income. That's also coming under employment, right? Past, present and prospective. That's very important. That's how law look at every practical aspect, student, right? So understand these things very correctly, right? Now let's see the term manager also, because it's included under this definition. Student, this is the term manager definition. Unless context otherwise require, manager in relation to an entity. In relation to an entity, company, partnership or trust. Mean a counselor, director, manager, member, officer or other person who participates, already participates or in future may participate, whether alone or jointly, with other persons in making senior management decision on behalf of the entity, right? You are making management decisions, senior manager decisions to direct your company's activities, right? And includes a working partner of a partnership and trustee of a trust, right? Even in a partnership, if you are working like this, right? This is the we call it, this is the exhaustive definition, and this includes inclusive definition, right? But not limited. This importance of this inclusive definition is that even these words are not there, it indicates that but not limited. But not limited, right? It only includes. It does not say only below persons are included, right? But not limited to these three. There could be others who covered under this earlier one, right? Earlier definition, right? This is the definition, and under this definition, these are some example, right? These are some examples. So what are the examples? Working partner of partnership and a trustee of a trust, if they are engaging these kind of decision making parts. A person treated as a manager of an entity by any law, if any law treat a person as a manager, then that person become a manager. If that person become a manager, that person become treated as being in employment, right? A non-resident person with respect to a Sri Lankan permanent establishment owned by the person. So foreign person, non-resident person, they might be doing business in Sri Lanka, branch office in Sri Lanka, Sri Lankan permanent, we call it branch office as Sri Lankan permanent establishment. Foreign companies are having branch office in Sri Lanka. Then that person, foreign person, is treated as employment, in employment, right? So this is the definition for manager. If the person become manager, that person treated as being in employment, right? So let's go to look at other terms. Maybe employer, employee. So students, these are other related definition. Employee means an individual engaged in employments. That's the importance of understanding term employment, right? So under term employment, we learn many things, that having fixed remuneration, position as manager, director, likewise, right? So if you have those characteristics of employment, if you are having position with other person as employment, then you are an employee, right? So employer means the person who engage or remunerates an employee, right? Engage or remunerates an employee in employment or pays a pension. Employment or pays a pension or other remuneration to former employee or to any other person for the past service of such former employee. So what this means? Employee in employment or pays a pension. You are paying a pension or other remuneration. Now there are employees who already retired. No, for these retired employees you are paying pensions, right? So if you are paying pension, then you also become an employer, right? Even though that employee currently not there as employees in your company or your office, right? Or other remuneration to former employees. Other remuneration to former employees or to any other person for the past service of such former employee or to any other person for the past service of such former employees, right? That means you had an employee, now they have been resigned, now they are not further employees of your firm, right? However, based on some agreement you had with them, you are paying to some beneficiary that they nominated, right? Let's say their child. You had an employee, now he resigned. However, after he been resigned, as employer, you pay his child school fee even after resignation. So that's also covered under employer. If you are paying his child school fee, then you are employer, right? And includes in the case of an entity is specified in column 1. This is the entity, right? Entity. 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 The person is specified in the corresponding entity in column 2. These are the employers. Employer. In these entities, these are the employers. Let's see what are the entity and employers. A company or a body of person, whether corporate or unincorporate. So employers are director. In a company, director will be the employer. A secretary, manager or other principal officer of such company or body of person. Principal officer, right? It may be director, it may be secretary, or it may be manager, whoever principal officer. A partnership. In a partnership, the president partner or any active partner resident in Sri Lanka. And in the case of partnership which no active partner is resident in Sri Lanka, the agent of such partnership in Sri Lanka, right? A trust, the trustee or trustees of the trust. A non-resident person, the agent or attorney of such person in Sri Lanka. A non-resident person, the agent or attorney of such person in Sri Lanka, right? So there will be, for foreign persons, there will be attorney power, right? They have been engaged for doing some activities on behalf of that foreign persons. Attorney power, right? We call it attorney, right? So those are the employers. A government institution, accountant, director of finance or administrative officer or head of the department or institution, head of department or institution or secretary to the minister or chairman of commission or committee or any other person who pays remuneration, whoever who pays remuneration, right? Those are the employers, right? Not limited to that. Means person who engage or remunerates and employs in employment or pays a patient. If here see, it's a inclusive, it's again inclusive. Exhaustive definition provided. Firstly, they provided proper definition. Then they provide example. Includes always mean example, but not limited. But not limited to below types, right? There could be other examples as well. They are just giving example for our understanding, right? So remember that. So this is important. This distinction of definition important. These are principles, right? When you read that, that's important. So now you have good understanding who is employee, employer, and employment is. I must say it's just letter understanding, right? Not the case understanding. We'll look at when we look at cases, you will understand it properly, right? But before going to that, we'll have that literal understanding first. Right. We'll go into employment income part now. So student, now let's see again this section. An individual's income from an employment for a year of assessment shall be the individual's gains and profit from employment for that year of assessment. So now you have a better understanding what is employment is. Right. In calculating an individual's gains and profit from an employment. So earlier it said employment is gain and profit from employment. Now say in calculating those gain and profit for a year of assessment, the following amount received or derived, that's very important, received or derived by the individual during the year of assessment from the employment shall be included, right? Received or derived by the individual during the year of assessment from the employment shall be included. So these words, this received and derived is very important. If you haven't received the income or you haven't derived it, you cannot tax it. Notional gains. Let's say company says you will be provided with bonus. Now you are thinking that you will be receiving bonus, right? In next year, maybe in board resolution, they pass board resolution saying you are receiving bonuses in next year, right? So can you take it into your income? No, not yet received, right? Not yet derived. Employment income you will learn under section 21, method of accounting, cash basis you are taking, right? Only if you receive the cash basis, you take it into your income, right? We will learn later, right? However, please understand this is important for every other source of income also. Income you actually derived, right? You have a right to get it, derived it, not notional, right? You have right for it. You already received though, you have right for it, derived, should be taxed, should be taken into your employment income, received or derived by the individual during the year of assessment from the employment shall be included, right? Next one, payment of salary, right? So let's see what are included on employment income, right? So for your easy understanding, I will say that whatever connection with employment is employment income, right? Whatever connected to employment is employment income, right? So that easy understanding you should have. So they are giving a list. First one, A. We'll go by this A. Payment of salary, wages, leave pay, overtime pay, fees, pensions, commission, gratuities, bonus, and other similar payments. So it covers everything, right? Wages, your salary, your bonus, overtime, gratuity, right? Everything, whatever commission as sales people you are receiving, everything is covered. And add another special term, other similar, right? There are principles behind these things, right? So there are legal principles saying that if the terms like this, this term does not specifically say this kind of, what kind of income, no. So it should be equal to something similar to this, right? So these other similar payments could also comes into that, whatever you are getting as an employment benefit. So other things. Let's come to next part. Next item. Payment of personal allowances. So there are many allowances that you are receiving from your employers, right? Personal allowance, let's say economic allowances, budgetary allowances, whatever allowances, traveling allowances, night shift allowances. There are number of allowances in companies. So every allowances, communication allowances, likewise there are many, right? So if you are taking a bank, that blue light allowance that cashiers are taking, previously I don't know, currently it's there. There are many allowances, including any cost of living, subsistence, rent, entertainment or travel allowances, even travel allowances, right? Subsistence, rent, if they are paying you a rent, right, that's also employment. Entertainment, if they provide any entertainment benefit for you, right, let's say they are providing hotel tour, so whatever allowances, right, maybe sports, yeah, they are providing in some companies, that some conglomerates I worked, they provided sports club membership also, they pay from them and I am getting the benefit. So those entertainment expenses, everything comes into that. Payments providing discharge or reimbursement of, that's very important, expense incurred by the individual or an associate of the individual, right? Discharge or reimbursement of expense incurred by individual or associate of the individual. So it's kind of this, right? Payment providing discharge or reimbursement expense. Firstly, understand expense incurred by individual or associate of the individual, right? So I'm an employee, right? So I am paying. I pay my MBA cost, right? I pay my MBA cost. I'm doing an MBA, so I'm paying that from my pocket, and I take that bill and go and claim it from my employer, right? Employer. So is it a employment benefit? Yes, it's a reimbursement. Reimburse. Firstly I incur, now I take it and reimburse from my employer, right? So it's a reimbursement of expenses by employee. Who get benefit? That benefit test is important. Benefit test. Who get benefit? Employee getting the benefit. End of the day, I am getting benefit from company to do my MBA. I reimburse it. So it's an employment income, right? And discharge. Let's say it's the same thing. Same thing. I am not firstly paying and taking the bill and go to my employer and reimburse. What happens is, my employer asks me to do MBA and they pay directly to the university. They pay directly to the university. Discharge, they directly pay to university. So I am getting benefit. So it's my income. Not only that, let's say I am going to post office for company work, right? For company works. Right? So that bill, that cost, let's say pick me cost rupees 1000. Let's say that bill I am taking to company and claim it from the company. That 1000 also coming under this, right? Discharge or reimbursement, whatever. However, that 1000 is, then again we will learn under section 5 subsection 3 it is excluded, right? We will learn that. But inclusion, every reimbursement is included. Next one, individual or associate of the individual. Associate of the individual. Who is the associate? Associate means related person of individual. Individual means employee. Employee is related person. Associate also defined in the section 197. Let's see exact section number, right? So for the moment, remember it as my spouse, my children, likewise, right? Close connection, parents, right? Siblings, all. So let's say my child's school fee are being paid by my employer, right? Discharge, directly they are paying to my child's school. So that's discharge of expense for employee, right? Even though it's not paid to myself, it's paid to my child's school, right? Or let's say I am paying my child's school fee and taking that and claiming from my company, right? So reimburse. It's not my bill, it's my child bill. So it is my associate person's bill. Then that's also coming under my income. So everything first include, then there will be certain income that should be excluded, right? We will learn. I'll summarize it and teach you, right? So I hope now you have better understanding on this. Discharge means directly paying by the company. Reimbursement means you pay, employee pay first, then take the bill and reclaim it from the company, right? Individual or associate persons. Associate person will have a quick understanding from the section. So student, associate person is defined under section 196, right? For the purpose of this act, two persons are associates or associated person where the relationship between two is that of an individual and relative of the individual. If we are considering about the individual, that other person is a relative, right? Relative. So he is relative. Relative also is explained in this section. In this section, relative in relation to an individual means the individual's child, spouse, parent, grandparent, grandchild, sibling, aunt, uncle, niece or first cousin, including by way of marriage or adoption, right? In whatever way, if these siblings are there, if you are, when as far as individual concerns and associate term is there, that means these relations, right? Associate means. So employer, if employer provide benefit to my child, that is a benefit for employee, right? If employer provide benefit to my parents, that's because of my employment relationship, right? Maybe a parent or my child also another employee of this firm, then that relation do not take into consideration, right? Because of my relation with the employer, they pay to some of relative of me. So that's the associate persons definition and implication on that. And other terms also there, we look at roughly at this in transfer pricing and all, we will discuss this in detail, right? That of partners in the same partnership. If you are in a partnership, let's say 5 partners, all 5 partners are treated as associated persons. That of an entity and person referred to in subsection 2, right? So if entity and persons in subsection 2 is associates. Let's see. a person and an entity are associate person. Now you are taking company, right? Company. Let's say company. Now company. Person and entity are associate person. Let's say another person, maybe a company or maybe an individual, right? Another next person also may be individual or maybe another company or maybe whatever person under each type of person. The persons control the entity or may benefit from 50% or more of the right to income, capital or voting power of the entity, right? Right to income, capital or voting power, 50% or more, right? So if this person has benefit of 50% or more, then there is an associate relationship. Either learn or together with person who under another application of this section are associated with the person, and whether directly or through one or more interposing, there could be subsidiaries A, B, and from all these relationship they have control, right? The person under another application of this section is associate of person referred to in paragraph A, right? Another application, let's say individual. Another application of this section means section 1, partnership, partner of partnership, or individuals relationship. Likewise, from another application become connected to this entity, right? Either alone or together with person who under another application of this section are associated with the persons, right? Right. So this individual has another relative, right? Let's say relative. Then company and that individual and the relative is associated. Likewise, the different interpretations are there. Few years back, this was very critical area to interpret. Why? There was some benefit that is given for SMEs and others if they don't have associate persons as entities, right? So that's a debatable area. We will discuss in later context when discussing on these entity associations, right? Interpretation area we will discuss later, right? For the moment you understand the literal meaning, right? So this is the associate. What you at this moment you need to understand, for individual, associate means these relatives. For individual, associate means these relatives, right? When we discuss about business and other company entity taxation, we'll discuss about other associates as well, right? Let's go to employment income part again. So students, next one, D, payment for the individual's agreement to condition of employment. So it's another important item, right? So you need to write every example that I am giving, right? Under these earlier ones also, every example you need to write. There would not be separate notes, only this example, right? Example, when I am telling it, you need to write, right? Through example you will be understanding, otherwise it's not, you will not understand all the things, right? It's not, there's no meaning just to read this, right? Understand it properly. Payment for the individual's agreement to condition of employment, right? So what does it mean? Payment for the individual's agreement to conditions of employment. So individual employee will be agreeing for any condition in the employment. So for that condition you are getting a benefit, right? So that's another employment income source, right? Income category. For example, let's say your employer wants you to stay at the company for another 5 years at least, right? Forget about 5, let's say 20 years. It's a long duration. And as an incentive for that, company, your employer say that we will give you one-time payment of 50 million, right? So then that is a condition that you agreed with the company, then you receive 50 million payment, then that is a employment income, right? So condition, it's not only time duration, there could be other condition, right? Maybe they are asking for you to go to some rural area. Therefore, for that condition, you are agreeing on that rural condition, then you are receiving some benefit, right? You will be giving some additional payment on that. Those are also coming under your employment income, right? Next one. Payment for redundancy. Payment for redundancy, loss or termination of employment, right? So you will lose your job, employment, right? That may be due to economic factor. Your factory will be closed down, maybe due to fire, and maybe due to a legal case, they need to close it down. So that's a loss of your employment, or maybe due to some other reasons. Fault in your side as employee, then they decide to terminate you. So whatever case, if you have been terminated your contract with your employer, if you are receiving payment from the employer for that termination, loss, redundancy, then that also a employment income, right? Termination fees. Let's say now suddenly your managing director asks you and blame that finance people do not understand business, they only number conscious, they know only debit credit, they don't know how to run the business. So you go home and he fire you, even though you are at CFO level. At CFO level they are doing it, right? Take my word seriously, right? So you need to have all those skills. You should be business acumen, right? All these analytical skills should be there at that level, not that accounting, reporting, financial reporting, not that, but analytical skills, right? Not double entries, not numbers, not just numbers. Business you need to understand. If not, they will fire you at that level. There are enough cases that we have seen, right? So it's true, it's there, right? So in that case, they may be giving you 3 months salary or may other benefit also, right? So in that case, that income also your employment income, right? Redundancy or termination, that's employment income. Right, next one. Subject to paragraph F of subsection 3. So we will learn it, right? We will learn it. When we are learning this paragraph subsection 3, we will then again come back to this provision and learn, right? For the moment, just read this. Subject to paragraph F of subsection 3, retirement contribution made to retirement fund on behalf of the employee and retirement payment received in respect of employment, right? So employer may be contributing to a retirement fund on behalf of you, employees, or maybe you are getting that payment from that fund, right? As employee, retirement payments received in respect of employment. You are getting retirement payments, right? You are getting retirement payments, not for a fund, right? You are getting it. Then that is your income as employee, employment income. And retirement contribution made to retirement fund on behalf of the employee. If the employee provide any fund, any external fund, benefit, they contribute each month some amount of salary, like let's say ETF, EPF, like there are certain retirement funds. So they pay on behalf of you. That also comes as an employment income for that certain individual, right? So there are exceptions, there are some items that is not coming under those income, so that exemption we will learn under subsection 3. For the moment, this is a exhaustive definition list that everything covers under this list, right? Nothing excluded. Next one. Payment or transfer to another person for the benefit of individual or associate person of the individual. Payment or transfer to another person for the benefit of the individual or an associate person of the individual. Benefit to individual. So it's like this. Now you should be able to break down your each and every provision, right? Payment or transfer. How you break it down? I'll write it here. Payment. So learn this, right? Payment or transfer. So this is how you learn from yourself. Payment or transfer to another person, to another person's, to another person's. Payment or transfer to another person for the benefit of the benefit of the individual or associate person of the individual. So this level of breakdown you need to apply to every section if you are reading it properly beyond your examination level, right? Beyond your examination level, right? In your consultancy journey, if you are a tax consultant, you need to break it every section into your understanding, right? So how you read it? Payment or transfer to another person for the benefit of whom? Associate person of the individual or to the individual, right? So now what does this means? The same example I have taken earlier. So let's say on behalf of you, on behalf of myself, my company paying to Chartered Institute for my membership, right? So that's a benefit for me. Or on behalf of my parents, they are paying to Parents Hospital, right? Likewise, all these things comes into this section. Associate, my parents' benefit is associate person's benefit, right? Payment or transfer, payment or transfer. Let's say not only payment, maybe another asset transfer also could be there, right? Company is selling laptops and one laptop is being given to me, right, for my personal use. So that's the employment income, right? That's the employment benefit, right? Or that laptop is being given to my child. So that's a transfer. That's the employment income, right, that you need to understand. Right. Next one. The fair market value of benefit received or derived by virtue of the employment by an individual or associate person of the individual. Read it again. The fair market value of benefit received or derived, right? So fair market value of any other benefit, right? You are not receiving, maybe you are not receiving in cash, but there could be any other benefit, right? For that benefit, you need to take fair market value, right? And it should be received or derived by virtue of the employment by individual or an associate person of the individual, right? So it should be received or derived by individual or associate person of the individual by virtue of the employment, right? Because of the employment, you are receiving some benefit. For example, let's say you might be given a vehicle to use, vehicle owned by the company to use, right? So that's a benefit. So it's not a cash receipt, it's a non-cash benefit. We call this as non-cash benefit. Non-cash benefits, right? Non-cash benefits, right? So you are receiving that benefit, or else you have been given a bungalow or house, right? So that benefit, or you have been given with some fuel for your vehicle. Likewise, there are many non-cash benefits. So these non-cash benefit also coming under employment income, right? Non-cash benefit. So there are separate guideline. Guide or circular for non-cash benefit. You can download it from Tramis IRD website www.ird.gov.lk, and there are tab called maybe APIT, right? APIT. In that, if you selected it, you can see non-cash benefit. There is a document called non-cash benefit. You can download it and you should purchase it if you are taking this into your examination, right? Other payments including gift, we will learn it separately, right? For the moment, we will go with these items in the section. Other payments including gift received in respect of the employment, right? So gift received, if you are receiving an gift, that also coming under your employment income. Maybe in each year they are giving you some financial award, top performer, right? Annual award. You are receiving a gift from the employer. So that's also employment income, right? That's also employment income that need to be considered. This one we'll discuss, right? The market value of share at the time of allotted under an employee share scheme, including shares allotted as a result of the exercise of an option or right to acquire the shares, reduced by the employee's contribution for the shares. So I'll keep it for you to understand for a moment, right? So you understand it, I'll explain it later, but try to understand this. Try to understand this at your level. I know that you are learning these option contracts, everything under your other subjects. So you can easily understand it. So try to develop an example and understand before I am explaining it. So let's see how you understand it, and I'll explain it later. So students, now carefully listen to me. we will explain this. The market value of share at the time of allotted under an employee share scheme, right? Market value of shares at the time of allotted under an employee share scheme. You know that there are employee share based scheme where employees are avoided with own company's shares. They are working in a company, let's say Haley's, right? So they have been granted their company shares, right, as an incentive to perform well, then company grow well, right? So that is a employment benefit. That receipt of that share is an employment benefit, and it should be included in your employment income, including shares allotted as a result of exercise of an option or right to acquire the shares, reduced by the employee's contribution of the share. So what does it mean? You need to take market value of share. You need to take market value of share less employee contribution. Right, employee contribution. So this is the employment income. Employment income, right? So accessible income from employment, that need to be done at which date? On the time of allotment, right? Not the time of granting. That company may be granting you the right or granting you the option, maybe in particular date, right? Not at that date, right? You are receiving a right means that's also a benefit in a kind, but not that date. But when the shares being allotted in share register, you register in your share register. Maybe let's say it's a private company. In that company share register, your name being mentioned, allotted, that it is allotted officially under company rules and regulation, right? Company law, right? It is allotted. It's actually allotted to your name. Now you are a shareholder legally. In that date, you need to take market value and any amount that you paid to acquire the share. Then balance is your taxable income. The profit is your taxable income, right? If it is loss, nothing to do, right? If it is loss, nothing to do, right? So this is the gain. Let's say you have been, when you join to company, that employer say we will give you a share within 2 years or 3 years time if you achieve this much of performance in the company, right? So you achieve it, and in third year you are receiving the benefit of share to be acquired at given cost, right? And market value will be some different amount. Then at that, after third year, you are taking your taxable income. For example, let's see, take an example, right? Right. For example, right to acquire a share of an enterprise granted to employee on 10th August 2025 for rupees 20 per share. If employee stay 3 years in the company, vesting condition, right? Employee stay 3 years in the company, right? At the time of granting such right, market value of share is rupees 10, right? So let's take those things into a note. Exercise price. Exercise. You can purchase shares at how much? For a 20 rupees, right? For 20 rupees. 20. Market value as of 10th August 2025 is rupees 10, right? Exercise price 20, market value as of 10th August 2025. This is the date of granting. So it's also a benefit, but you don't take into account. Why it's specifically excluded, we will discuss under subsection 3 of section 5, right? You take it on the date of allotment only. Now let's say other information. After 3 years, shares were acquired by employee and market value of share was here also share, not shares, share, one share. Share was acquired by employee and market value of share was 50, right? Now let's see. This is first year. It's year of assessment 25 26. Now come to third year 25-26, August 10, 2025, 26, 27, 28, right? 28 to 29. 28 to 29 year of assessment, right? So now what information they are giving? Employee has exercised. Now employee has exercised his right and purchase it at 20. Employee contribution. So you need to take market value at that date, and employee contribution. Employee contribution, let's say 20, right? Employee contribution 20, and market value should have been given. Market value of a share was 50 in 3 years. 50, right? So 50 minus 20, this is the assessable income from employment, right? This is the assessable income from employment, 30, right? So it's happened, this taken into account only when shares are allotted. That's need to be remembered. Not at the time it's granted, only when shares are allotted legally in share register, right? So that's one example. Now let's see another example. Option to acquire shares in a company as employee benefit. Kamal received below benefits. Option to acquire 10 shares at rupees 100 each, given on May 2nd, 2025. At the time of granting this option, that means May 2nd, 2025, market value of option was rupees 700. Now at the time of granting, market value of this option. What is option means? When you enter, your employer will give you a contract signed and say that you can purchase our company shares at this given price, 100 each. You can purchase 10 shares, 100 each, right? So at any given time, there is no any limitation given in this contract, right? So normally there could be any vesting condition, but here no, right? So at any date, right? So you keep it, you don't purchase anything, right? If you purchased it, you might have to, if you purchase this, you may incur 100 into 10 shares, right? So 1000, right? But you don't do it. Today market value of, this is not the market value of share, right? This is the market value of that contract agreement, right? Contract agreement. So it can be sold to someone else. You could have sold it to someone else also at 700 rupees, right? This option could have sold at 700 rupees and got the income, right? So you haven't done it, you have kept it, and let's see next story. On June 2nd, 2026, now earlier case was 2025, 25-26, this is 26-27 year of assessment, has exercised the option. Market value of share on June 22nd, 2026 was rupees 200 and market value of option was rupees 1500. So now how you do it? Is it you are taking 1500 minus 700, or what is the computation, right? What is the computation? So here is what happened. You received the option to purchase share at given cost, right? Purchase 10 number of shares at 100 rupees each, and after 1 year passed, you decide to not to sell that option but to purchase shares. Purchase shares means shares will be allocated into your name, allotted. At the time of allotment, you are taking it into your account, right? So now you are taking 22nd June 2026, 27 year of assessment, right? So you are in this year, market value of share you need to, now it's allotted on you know. So benefit you are receiving is the share allotted. Market value of shares. So 10 into number of shares, 10 into 200. Now market value is 200, right? 10 into 200. So 2000. And what is the cost? Employee contribution. So you had right option to purchase it at 10 shares at 100 rupees each. So 1000, your contribution would be 1000. Then balance 1000 is your assessable income from employment. So this is the rationale. What you need to take is, if shares of a company given, you need to take the benefit at the time of allotting it in your name, right? Employee's name, right? Not at the time of granting, not at the previous year when it is been granted. At the time of allotment, you need to take it into your account, right? So that's very important. We will discuss further when we discussing the exclusion part. Now next we have to consider the exclusion part. Before that, you need to study these things again and again in simple terms. What is important for how you remember in simple terms is, anything connected to employment is coming under employment income unless it is specifically excluded, right? Firstly, everything include, then they exclude certain thing. We'll learn it in coming sessions.